Good afternoon, guys. Good afternoon, Surya, and good afternoon, Akash. Good afternoon, Akshay. My voice is clear. Please respond. Okay, guys. So, in a previous class, we just learned about the definition of the valuation and some few important terminology we're using in valuation and some more theory content, right? Now, let us quick revise that entire things once again. So, we learned a definition. Valuation is a analytical process of determining fair value or current value, present value of either asset or a company or security. Very, very important, these three terminologies. In this entire valuation, we are calculating these three things only: either asset value or business value or security value. Are you clear now? Next, by using different models, I think you already know the models name also, we discussed in last class. So first, deciding the method, we have to choose approach. We have a three approaches, right? Market approach, cost approach, income approach. So under the approaches, they classified as a methods. When it comes to income approach, we have only two methods. One is discounted cash flow method, another one earning capitalization method. When it comes to market approach, we have a three methods. What are the three methods? Market price calculation method, company comparable multiples method, company comparable transaction methods. I just provided simple examples, but in next chapter we will discuss about the detailings and calculation and the theory of that methods. When it comes to cost approach, here also we have a three methods for the two methods. For the two methods we have, sir, replacement, reproduction. Are you okay now? Done. Apart from these methods under approaches, we have some specified methods: net assets valuation, goodwill valuation, economic value added, or market value added. Clear? Done. And also I said of important points: valuation is a subjective concept, as well as valuation done at point of time, and price is different and value is different as per valuation. That's it. And important and MCQ area, purpose of valuation. We are not doing valuation without purpose. Are you clear, sir? We are doing a valuation at point of time. Why we are doing at point of time also? There is a purpose. Are you okay? The important purposes are mergers and acquisitions, liquidation and insolvency, trade disputes, IPO, business reconstruction, buyback of shares, and estate planning. Clear? Done. So next, another point: valuation is a multidisciplinary in nature. What does it mean for multidisciplinary nature? Valuation is not a single subject; it is a collection of all subjects. That's why we are using the word called valuation is a multidisciplinary in nature. Okay, done. So another point you have to focus: valuation premise. The next point you have to understand: what's your valuation premise. Okay, first, So just forgot about the word called valuation premise. Now in this valuation premise, when you start any subject, you have to understand fundamental basis, fundamental basis and assumptions and principles, conditions, concepts. The collection of all fundamental basis, assumption, principles, conditions, concepts is known as valuation premise. It's a theory point. So there's a chance of asking MCQ. In a valuation premise, what are the points we have to consider? So what are the points we have to consider? Fundamental basis, assumptions, principles, conditions, and concepts. I will give a clarity of the individual things. Now, when you're doing a valuation, you need a basic numericals. Without basic numericals, we can't create imaginary numbers. Yes or no, sir? So you already said an example balance sheet. Yes or no? No? You are considering balance sheet. Out of that balance sheet, we have a long-term liabilities, short-term liabilities, long-term assets, long-term investments, and a short-term assets. We are not considering all values. We are considering what are the values is sufficient for valuation. Yes or no, sir? It means first, if you have a data, and that data we are processing. In simple term, processing the data, you will get an outcome. By using that outcome, you are doing a valuation. Are you clear? Now, where you are procuring the data for valuation? You are procuring data from where, sir? You are procuring data from finance and accounting. Yes or no, sir? You are procuring that numerical data from where? Finance and accounting. In finance and accounting, they are followed lot of assumptions. Lot of assumptions. So when you are considering that finance and accounting data, what are the assumptions they followed at the time of preparing financial statements? As a valuer, you have to consider that are the assumptions for valuation. Clear now? Now please tell me, anyone about the assumptions? List of assumptions. What are the assumptions you followed in accounts? Going concern excellent. Can I use the word consistency? Okay, done. Accrual. Yes or no, sir? That kind of assumptions they are followed in accounts. We are using that accounting information for valuation. That's why valuer also assume same assumptions. Are you clear? Without that assumptions, you can't do valuation. Are you clear, sir? If you create a own values, then no need to follow the assumptions. But you are not creating the values. You are taking the values from financial or accounting. Are you okay? Now, principles. Oh, sorry. Fundamental basis or assumptions. Now write down the fundamental basis or assumptions list. So going concern accrual next. Next. consistency. These are the things you already know as per accounts. I will add some more things. A discount rate is appropriate. Stable economic in industry environment. Accounting information is reliable. So in a previous class and yesterday, in a yesterday class also, I used a lot of times a word called reliable. Reliable. So lot of methods we can use for calculation, but you have to choose what one? Reliable and appropriate one. So apart from the accounting, you have to focus more on this extra 3 assumptions in valuation. So what is the fourth one? Discount rate is appropriate. What does it mean for discount rate? What does it mean for discount rate? So in yesterday class you said now convert the future economic benefit into present value. How it possible? If future value multiply with the present value factor, you will get a present values. For calculation of present value factor, we have to use a cost of capital rate. Cost of capital rate. That cost of capital rate is appropriate. So what are the rate using in market? We are assuming that that is a rate we are using in our company also. Yes or no, sir? But when it comes to the reality, we can't say exactly. That's why the heading name called assumptions. Are you clear? Done. So you can observe the another word I added. What's the word? What's the mean for not absolute? What's the mean for not absolute? It's not correct. If you without following the assumptions, it is not correct. If you follow the assumptions, then only it will be correct. Are you clear, sir? Next. Principles of valuation. So when it goes to the principles, the first one is substitution. The second one, anticipation. The third one, demand and supply. The fourth one, highest and best use. And the fifth one, fair market value. So these are the principles we are following. Can anyone know the meaning of substitution? Substitution. Substitution. Take an example to understand. I am ready to purchase this building. Very clear, sir? The same kind of buildings we have in surrounding also. For example, the market value estimation of the buildings is 10 CR. Very clear? All. But this seller saying that it is a 15 CR. It is a 15 CR. As a buyer, are you ready to purchase or not? Why? Substitution. You can observe the similar buildings in the surroundings. What is the price of that? 10 CR. So you are expecting same building for what? 10 CR only. That's called substitution principle we are following. It means when you are purchasing any building or an asset, you will compare with the substitutes or alternatives. Are you clear now? Now next, what about the anticipation? Anyone? Anticipation. Estimation of what? Future value or present value? Estimation of, yeah, you can write that words on side of that headings. Substitution means buyer want pay more than alternative. Now when it comes to the anticipation, you said estimation, right? Here value equals to present value of future benefit. I want future value only, but decision time is what? Present or future? Decision time, present. Next, demand and supply. At the time of valuation, you have to check the demand and supply of the product. At the time of valuation, as a valuer, you need to check demand and supply. Yes or no? Sir, no, sir. Previous class you said demand and supply is related to price. Here we're doing what? Valuation. Even though commodity value depends upon the demand and supply. Take an example, gold. Very clear, sir. You are ready to valuing the gold shop. Are you deciding the value of the gold based on demand and supply or not? If there is a huge demand in the market, price of the gold what happen? Increases, automatically we will value more. Yes or no, sir? Here I am not focusing on the price, I am focusing on the valuation only. But demand and supply also impact your valuation values. Are you clear? Now write down market forces. Market forces. Market forces. Next, highest and best use. For this, how this would help at the time of valuation? Anyone? Highest and best use. Take a previous class example. Vijayamalia mansion. Wipro purchased for, why? They consider present usage or future usage. Yes or no, sir? Yes or no, no? We are not focusing on the current, we are focusing on future. Are you okay? Now write down the point. Value based on best legal use. Value based on best legal use. Now, what does it mean for fair market value? You already know the meaning of fair market value. I think you learned in your DD, direct taxation. Fair value, fair market value. Yeah. What's a fair market value? Simple, man. Buyer and seller both of know the willing price. Yes or no? Buyer know the how much it is. Seller also know the how much it is. If transaction happening for that value is known as a fair market value. Write down. Seller and buyer. Seller and buyer. Purchase data. Market value. What does that mean for market? Only single person knows or everyone knows? That's why it's called what value? Fair market value. Fair market value. So this kind of principles we are using in valuation. This is the important things and important points you have to learn for MCQ purpose. Are you okay? So few more is there. We will discuss at the time of theory discussion before the MCQ session. Now I start with the calculation part. As of now, it's sufficient for calculation. Okay. Now, one point we missed here. There is a concepts now. The concepts is nothing but methods. The concepts is nothing but methods. The concepts is nothing but methods. Here is the conditions now. The conditions is nothing but fundamental basis, assumptions, principles collectively known as conditions. Fundamental basis, assumptions, and principles collectively known as conditions. Now the fundamental basis, assumptions, principles, conditions, concepts collectively known as what? No. Listen. Fundamental basis, assumption, principles, conditions, concepts collectively known as valuation premise. We have a types of valuation premise. Are you clear, sir? We will discuss at the time of theory. Okay. Now, so this is the theory content is required and important in chapter 5, fundamentals of business valuation. Guys, clear? So if you know all this basic stuff, then only we can start the valuation. So entire content is here. So if you want to do valuation, first you have to check what, sir? Fundamental basis. What's the purpose we are doing a valuation? Simple. Very clear? Are you the time of you are at the time of liquidation? Are you at the time of going concern? Are you at the time of orderly liquidation? You have to check that base. After checking the base, you have to consider what, sir? Assumptions. Why? Because we are not using your own information. You are using a accounting and finance information. After that, you have to follow principles. All is known as what, sir? Conditions. If all set. Next, we have prepared all checklist. Now we will start with the valuation. If you do a valuation, you have to consider what? Approaches. You need to approach whom? Approaches. After approaching the approaches, on that you have to consider any one of the method for reliably. That is nothing but what, sir? Concepts. This is simple of valuation. Are you okay? So when you take in a cricket match, guys, first you have to decide the venue, how many teams is there. That's called fundamental basis. Are you clear, sir? When it comes to the assumptions, 20 overs or 10 overs. Are you clear now? Or balls, etc. So based on the assumptions only we will consider. We don't know exact what the time happening at that ground. If it is a initially we are planning time only now. At the time of planning, I will decide it's a 10 overs match assumption. But when it come to that, there is a few players are not came. Because of that, I consider to 6 overs. Assumptions we have taken at the time of before match. After that, I consider principles, team selection. After team selection, all happens called condition. Now I am start the match. So if you want to start the match, you have to use what, sir? Concepts or methods. You can take anything. You have to follow these 5 rules. Then only we can do estimation equal to actual or near to the estimation. Okay, done. Apart from the theory content, next calculation part, sir. When it comes to the calculation part, first you need to learn cost of capital. Next, you need to learn capital structure. Next, you have to learn financial analysis, next capital budgeting. Sir, what the word you are using? You have to learn, you have to learn. We already learn is the answer. Yes or no, sir? You already learn or you need to learn? You already learn in your interstage, CMA interstage, subject name called what? Financial management. Financial management. Okay. Now, this chapter is there now, financial analysis. That is nothing but ratio analysis. Financial analysis is nothing but what, sir? Ratio analysis. Okay, so this financial analysis and ratio analysis we are not discussed in this chapter. We will discuss in chapter 1. What's the chapter number 1? What is chapter number 1? Introduction to performance management. Sir, it's a theory chapter, no? Yes, sir. Because of Q's calculation in chapter 5, I sent that entire topic to chapter 1. Okay. So there is a two times they given called financial analysis in chapter 1 as well as chapter 5. So because of the duplication, I consider in only one place, that is chapter 1. So yesterday I showed a question paper. They're asking ratio analysis problem, ROE, ROCE, EPS calculation. Yes or no, sir? All kind of problems available in that chapter. Okay, done. Next, when it come to capital budgeting, in this capital budgeting, we are not discuss all techniques. You know, there is a discounting techniques and non-discounting techniques, NPV, IRR. Here we will learn only one thing, that is called NPV calculation. Okay. Now, when it come to capital structure, we need to learn all concepts in CMA. When it come to cost of capital, here also you have to learn all concepts in CMA. Okay. Now, I start with the concept number 1. Cost of capital. So anyone tell me about the definition of cost of capital or meaning or any shortcut? Please tell me what you know the meaning of cost of capital. The cost which are interest. Say in understandable manner. Amount which are recovered from investment. Amount which are recovered from investment. Yes or no, sir? Yes or no, na? I invested 100 crore rupees, and that how much I need to recover back? I need to recover back. Yes or no? Yes. Okay, done. Now I will express in a definition manner as per CMA. Cost of capital is a minimum rate of return company need to earn to meet expectation of an investor. Cost of capital is a minimum rate of return company need to recover. For satisfying the customer, or investor. So what you said is absolutely right. Very clear, sir. If I procure 100 crore rupees from outsider, means I have an obligation of interest. In simple terms, I have an obligation of interest. I need to fulfill that obligation. So that's why if I invest 100 crores in the plant and machinery, etc., minimum how much I need to earn? What are the obligation I have? For example, 10% is a rate of interest. 10% is a rate of interest. How much I need to earn? Minimum 10%. Sir, if I earn 15%, well and good. 10% you are used for payment of debenture holder. The 5% you can keep in your bank account as a bonus profit. Yes or no, sir? Sir, I am taking that 100 crore rupees for 10%. By investing in the business, I earned only 8%. What now? Out of 8%, I will settle to debenture holder. Remaining 2% is there now. I need to spend from my pocket. At the time of entering into the agreement, I say that without irrespective of profits, I will pay your interest. Are you guys clear? Now you can understand the cost of capital definition. It is a minimum rate of return company need to earn. Which purpose? Sir, need to earn for which purpose? To earn to meet what, sir? Company need to earn to meet expectation of whom, sir? Why I use the word investor means I have a multiple options for procurement. Sir, why are the word you are using minimum? Please use the word maximum. Are you agree for the maximum? Why you are used minimum? I am using maximum. Which one is the right one? Minimum or maximum? At any cost, you have to earn that. At any cost. That's why what's the appropriate word? Minimum. Are you clear, sir? Done. Sir, why you are using investor? You can go with the specification. Owner, debenture holder, preference shareholder. Why you are used word called investor? Why you are using word called investor? I have procured 100 crores from outsider, sir. He was my family friend. Are you clear now? Can I use the word equity or debt? Can I use the word equity or debt? Equity or debt? Why? Not because of outsider. At the time of agreement, I said I am not giving any ownership to you. I will enter into agreement. I will pay your interest. I will pay your principal at 5 years after. That's why he was a whom? Debenture holder, not a equity shareholder. If I sell my ownership to him with 50%, give me 100 crore rupees, I will sell my 50% of ownership. That 100 crore rupees is known as equity share capital. Equity share capital. Now, why I used investor means I can procure capital from 5 sources. I can procure capital from how many sources? 5 sources. For example, what is the requirement of the company? For example, 100 crore rupees. For 100 crore rupees, 20 crore I taken from selling of ownership. What's the meaning for selling of ownership? What is the meaning for selling of ownership? Equity. Yes or no, sir? Now, this capital name is called equity share capital. The person involved in the transaction is known as equity shareholder. Equity shareholder. Are you clear? Now, I procured another 20 crore rupees. I procured 20 crore rupees from my family friend. Very clear? I explained my requirement. I explained my business ideology. I explained my future potential and growth. After all discussion, he said, I am not ready to take any risk. I am not taking any risk. Are you clear, sir? So, okay, then fine. What you need? I will give 20 crore rupees to you. Just pay interest. Just pay what, sir? Interest. Yes or no, sir? He was not ready to take any risk. Sir, what is the risk is involved? Sir, if he was a owner, he need to bear the risk. If it is an outsider, He was not he was not, there is a no chance of risk. What happening in the business I don't know. At the end of the year I want what? Interest only. Clear? So that kind of capital is known as debentures. Here also I am selling a document name called debenture. Are you clear? When it comes to this case, selling of ownership means what? I am selling one security. That security name is called equity share. Equity share. What are the points we are quoting at the time of agreement of that the security means? You are the owner of the company. You are liable for the company transactions. After completion of all obligations only, you will get a profit. Yes or no, sir? And as well as you will receive growth aspect. Are you agree for this? As a owner, you need you are expecting what? Growth. Growth. If there is a no growth means I am not ready to stay with you. Why I am staying with you? Because in a ownership point of view means I will in future there is a chance of growth. Yes or no, sir? Can I share that growth to debenture holder? Can I share that growth to debenture holder? Why? He was only taking fixed rate of interest irrespective of business profits. Are you clear? Now that capital is known as what, sir? What is the capital? Debentures. In capital point of view, debt. In capital point of view, what's a debt? Now the person involved the transaction is known as debenture holder. Debenture holder. The next kind of procurement is another 20 crore rupees from another family friend. Very clear? I explained my idea same to him also. He said, I want ownership. I want ownership. But as a owner, I am not ready to sacrifice my ownership. Why? I already sacrificed by selling the ownership. I already sell ownership for how many rupees? How much rupees? 20 crore rupees. If I sold again for ownership, what happened? My ownership dilute or increase? Dilute. If I dilute, what happened? They will join as a true owner. They are came after if they increase their ownership to 51%, they are taking a decisions. I will see. That's why I'm not ready to sell my ownership again. Okay. Now I said there is a document name called debenture. Please take it. But he was not ready to take that debenture. Now what I need to do? I need to create one new security. That new security name is called preference share. Are you clear, sir? So what happening in this preference share capital means simple things are happening. It is in a hybrid debt. Some conditions like equity share capital, some conditions like debenture. Are you clear? Here I will quote the preferred rate or percentage rate of preference. But the meaning of the rate of preference is first I will settle the profits to whom? Debenture holder. Are you clear, sir? After settling the debenture holder, there is a hidden partner is there for every company called government. Are you okay? After settling the interest, I need to pay what? Tax. After paying the tax, what the amount I received is known as net profit. You can also use a word called what? Owner's profit. But as a owner, we are not share that profit. I will pay to you as a preference. As well as I pay to you as a preference. Are you clear, sir? Irrespective of profits, I am not giving. If owners have a profit, before sharing the owners profit, they will sacrifice and share to you as a preference dividend. Guys, clear? The name also came only because of that preferred importance. Now, okay, 20 crores are raised from what kind of capital? Preference. Then a capital point of view is known as preference share capital. The person involved in the transaction is known as a preference shareholder. Preference shareholder. Guys, clear? Now, how much you procured, sir? 60. And the 20 crores is there, na? So there is a no relatives. There is a no third parties. There is no other parties. So only one person is there. At company, not a person, company. What, sir? Generally, debt means in our mind only one thing is came, that is called bank. But when coming to the company point of view, bank is not a first option. Are you clear, sir? We have a multiple sources or different sources we have in the market. Out of that, you can procure. So you can sell your ownership, you can sell security name called debenture, you can sell security name called preference. Are you okay? Now finally, I went for what, sir? Bank. My question is, are you selling any security to bank? Are you selling any security to bank? No. You are not selling any security, but you are mortgaging your company documents or you are mortgaging your plant and machinery document. Are you clear? Yes or no, sir? Now, that capital name is called term loan or bank loan. Term loan or bank loan. Term loan or bank loan. Sir, in ownership point of view, are you selling any security? Ownership point of view, are you selling any security? No, no. Selling of ownership point of view, are you selling any security? Yes, that security name called what? Equity share. In debenture point of view, are you selling any security? Yes or no? Debentures point of view, yes, you are selling a security name called debenture. In preference share capital point of view, are you selling anything? Yes, I am selling security name called preference share. When it comes to the bank point of view, I am not selling any security to other party. I am just mortgaging my documents. That point is also very important. Next, pending 20 crore rupees is there na? 20 crore rupees is there na? Now this 20 crore is an optional. Why it's an optional means, if you are having a existing business, there is a heading name called reserves and surpluses. You can use that reserves and surpluses for business purpose only. Yes or no, sir? So if you are not an existing company, you are not having this 20 crores, you need to procure the 20 crores from these sources only, remaining sources only. In our example, we are an existing company. If you are an existing company, do you have any resource? Yes or no, sir? Can I use for business purpose? I created only for the what? Business purpose. Now, can I use the word owner's fund? Can I use a word called owner's fund? Reserves and surplus is a owner's fund. Yes or no? Why? Sir, at the end of the year, we have a 1 lakh rupees profit. In board meeting, all the members taking a decision, we will share only 5 lakh rupees as a profit share. Remaining 5 lakhs is there now out of 10 lakhs. We will keep for the business purpose, as in a reserves and surplus. Whom fund it is? Owners fund. Are you clear? Who have a right on that fund? Owners. Equity shareholder. Now, this capital point of view, we are using a word called retained earnings. Retained earnings. The word retained means what? 100% profits are not shared to owners. Out of that 100%, part of the payments are shared. Remaining payment is retained for future business purposes. That is a future now. Now, whom fund it is? Equity shareholder only, na? Yes or no, sir? Now, equity shareholder. This is the basic stuff you have to learn in cost of capital. Just you understand what, just theoretical knowledge of the cost of capital. Are you clear, sir? How many sources we have? 5 sources. You can sell the security name called equity share. You can procure. The capital is known as equity share capital. You can sell the security name called debenture. You can procure the money. That capital name is called debenture. Debenture amount. Next, you can sell the security name called preference share. You can procure the money. It's called preference share capital. Next, you are not, this 3 options only you are selling the security. Remaining 2 options you are not selling anything. Be clear? Taking a look on that bank loan. In bank loan, I am not selling any security to the bank. I just mortgaged my company documents. Are you clear now? When it comes to owners fund called retained earnings, are you selling anything? You just using from the bank. Just using from the bank. You are not selling anything to anyone. Are you clear, sir? So, okay, done. This is a theoretical knowledge. Now, We need to focus on the calculation. Sir, I procured 20 crore rupees with the help of selling of equity shares. Now, they are provided that money to our company without expectation or with expectation. As a owner, you are investing in my company by purchasing my shares. Are you expecting anything or you are not expecting anything? Expecting. What you are expecting as an investor? You are expecting what, sir? Equity dividend. You are expecting what? Equity dividend. Sir, if I invest that 1 lakh rupees in outside, I will receive interest, sir. I am not ready to invest on that outside. I investing in your company. Yes or no, sir? Minimum I will expect amount of interest. But its offer is very genuine. Why? Because I receive a ownership. I am the owner. That's why I invested. If I invested means without expectation I can't invest. The basic rule of the investor. Now when it come to this 20 crore rupees is there now with help of debenture. Are you expecting anything as a debenture holder? Yes or no, sir? What it is? Interest. As a preference shareholder, you're investing in my company with help of purchasing of preference shares. Are you expecting anything or you are invested free of cost? Expecting something. That expectation is known as preference dividend. The expectation is known as preference dividend. The expectation is known as preference dividend. Now this 20 crores is there na bank. Bank are providing for free of cost or it expecting something? Expecting something. Bank what expects from you? Interest. Are you clear? Now retained earnings is there na, another 20 crores. On that 20 crores, any expectation? Any expectation? Any expectation is a point. Whom fund it is? Bonus fund. Bonus fund. I said it clearly, company have 10 lakh rupees of profit after settlement to all debenture holder, bank, government in the form of tax, preference shareholder. After settling these 3 members, this bank also is there na. Bank 4 members I settled. After settlement of 4 members, I have rupees of what? 10 lakhs. Now I need to share. Now on that board meeting, they're taking a decision. We will share only 5 lakhs. We will retain for what? 5 lakh rupees for future purposes. Are you clear? Now I am the shareholder of this company. I receive 10,000 for example. I receive 10,000. If they share 10 lakh rupees, how much I will expect? 20,000, right? For 5 lakh sharing, how much I received? 10,000. If company shares entire 10 lakhs to owners, as a part of the owners, how much I will receive? 20,000. But because of board meeting they are conducting, they shared only 5 lakhs. I received only 10 lakhs. What about the rest of 10,000? It included in this retained earnings. Are you clear, sir? My point is, if I lose this 10,000 this time, they will invest on another businesses. I will receive more than 10,000. That's why I am losing the 10,000 now. Sir, clear, sir? ఇప్పుడు నాకు 5 లక్షలే కదా పంచింది వాళ్ళు మొత్తం మీద. యాజ్ ఏ ఓనర్గా నాకు 10,000 వచ్చాయి. అది క్లియర్? మొత్తం 10 లక్షలు పంచుంటే 20,000 వచ్చింది అది. ఇప్పుడు నేను ఏం చేస్తున్నా, వాళ్ళ తీసుకున్న డెసిషన్ని అగ్రీ చేస్తున్నా. వాళ్ళు తీసుకున్న డెసిషన్ ఏంటి? 5 లక్షలే పంచుతున్నాం, నీకు ఎన్ని షేర్లు ఉంటే అన్ని రూపీస్ వస్తాయి, నీకు ఇన్ని షేర్లు ఉన్నాయి కాబట్టి 10,000 వచ్చాయి అని చెప్పారు. ఓకే, నాకు ఒక క్వశ్చన్ వచ్చింది, మొత్తం 10 లక్షలు పంచని అడదాం అనుకున్నా. ఎస్ సార్? నో సార్, నా డబ్బులే కదా 10 లక్షలు పంచమని అడదాం అన్నప్పుడు నేను క్యాల్కులేట్ చేసుకున్నా. అరే ఇప్పుడు మొత్తం 10 లక్షలుగా నాడు పంచాడంటే నాకు వచ్చేది ఎంత? 20,000 వస్తుంది. బట్ ఇప్పుడు వాళ్ళు ఒక 5 లక్షలు ఎత్తి ఫ్యూచర్ కోసం ఎత్తి పెట్టారు కదా, ఆ ఫ్యూచర్ మళ్ళీ ఏదైనా బిజినెస్లో ఇన్వెస్ట్ చేశారు అనుకో, ఇప్పుడు దాని నుంచి 10,000 వస్తుందా, 10,000 కంటే ఎక్కువ వస్తుందా? 10,000 కంటే ఎక్కువ వస్తుంది కాబట్టి ఇప్పుడు సాక్రిఫైస్ చేద్దాం 10,000, జస్ట్ 10,000తో సర్దుకుందాం. ఎస్ సార్? నో సార్? అంటే ఇప్పుడు నాకు ఈ 5 లక్షల మీద రైట్ ఉందా లేదా? మళ్ళీ ఆ బిజినెస్లో పెట్టిన తర్వాత దాని నుంచి ఏదన్నా ప్రాఫిట్ వచ్చిందంటే ఎక్స్పెక్ట్ చేస్తానా చేయనా? ఎస్ ఆర్ నో సార్? ఇట్ మీన్స్ దిస్ రిటర్న్ ఎర్నింగ్స్ ఆల్సో హ్యావ్ ఎ వాట్? ఎక్స్పెక్టేషన్. And the return earnings also have a expectation. For whom? Equity shareholder. Now what they are expecting from return earnings? Same. What? Equity dividend. Guys, clear sir? It's my money. You are investing in our business. If you have a profit, give me my share. What's the share name? Equity dividend. Okay. Now let us check the calculation part. This equity dividend calculated by using KE. This debenture interest specification is important. Debenture interest calculating with help of KD. This preference dividend calculating with help of KP. This bank interest, debenture interest is different, bank interest is different. Calculation with help of KT or KT small t, term loan it represent. Now this equity dividend is there now. This equity dividend is there now. It is using a word called KR, not KE. Cost of returned earnings. Cost of returned earnings. Now, so without late, I start with the KD calculation. Cost of debenture. Cost of debenture. Cost of debenture. Without knowing all those things, you can't write exams properly, sir. Just revise once again. Cost of debt calculation. When it comes to the cost of debt calculation, we are using two concepts here. Two concepts. One is redeemable debenture, another one is irredeemable debenture. Do you know the meaning of irredeemable and redeemable? What's the meaning for irredeemable and redeemable? Okay. That's called convertible debentures. Called convertible debentures. If there is a okay. No. What, sir? Redeemable, irredeemable. Irredeemable means you will receive only interest for lifelong or perpetual life. You will not get back your principal. You will not get back your capital. That kind of debenture is known as irredeemable debenture. So if you receive interest for every year, at the end of the nth year, you will receive back your capital. That is called redeemable debenture. Are you clear, sir? Now see. So basic calculation they are using, just a basic calculation. For example, I took a loan from Sham of rupees 10 lakhs. I paid a rupees of 10,000 every month in the form of expectation. Yes or no, sir? Now, how much interest I paid in a percentage form? I took a 1 lakh rupees from Sham, sir. At the end of the month, every end of the month, I am repaying 10,000 rupees. Yes or no, sir? Now my point is, how much percentage I paying every month? How? Amount of interest I receive divided by amount of investment into 100, you will get a interest percentage. That's the logic they are using here. Amount of interest divided by investment, or amount of investment divided by capital. My point of view, capital. Sham point of view, investment. Clear now? Now see. So basic interest calculation. Amount of interest divided by amount of investment or capital. Why I am using capital and investment? Both are right. Both are correct or wrong? Capital and investment. Yes, sir. Investor point of view, the amount of 1 lakh is a investment. Receiver point of view, that 1 lakh is known as a capital. Are you okay? Now see, redeemable. When it comes to irredeemable, KD equals to interest 1 minus tax divided by net proceeds or market price. Net proceeds or market price. Interest 1 minus tax divided by net proceeds or market price. Interest 1 minus tax divided by net proceeds or market price. Why 1 minus tax? Why 1 minus tax? Yes, interest is a burden to the company. That's why government providing a benefit to you. You can deduct the interest before payment of tax. Because of deducting before payment of tax, your taxable profit reduces. If taxable profit is reduces, automatically you're paying what tax? Less tax. Guys, clear? Done. So when it comes to redeemable debentures, here irredeemable point of view, you know the definition. What's the shortcut for this? You will receive interest for how many years? Infinite. What about the capital? What about the capital? You are not receive back. But when it comes to in redeemable point of view, you will receive interest for how many years? Maturity is nothing but n number of years. For example, at the time of agreement, man, if you enter agreement for 10 years, what is the number of years? 10. If you enter the agreement for 20 years, n equal to 20 years. Are you clear? Now what about the capital? Are you receiving back or not? Yes. When? Nth year. When? Nth year. What does it mean for nth year? At the end of the maturity. So for example, in our example, what n equal to 10. For example, for every year ending, you will receive interest for 10 years. At the end of the 10th year, what happen? You will receive interest plus capital. What about the redeemable? You will receive only interest for perpetual life or infinite life. Guys, clear? Huh? Capital we can't recover back. Sir, you can observe. I focused only on interest or capital. In first case, interest. Are you okay now? Sir, what does it mean for NP or MP? NP represent net proceeds. If you are selling a security to the debenture holder, right? For example, you are selling at 100 rupees. You are selling at 100 rupees. You will receive also? You will receive also 100 rupees. Yes or no, sir? You are sold for one debenture equal to 100 rupees. How much you will receive back from him? 100 rupees. That is called face value. That is called what, sir? Face value. Now your company have a goodwill. Your company have a goodwill. You sold that debenture for 110 rupees. How much you will receive back? 110. That is called premium. 10 rupees is there, na? Premium. Now net proceeds equal to 100 rupees or 110 rupees? 110. How much benefit you will receiving for solding the security is called net proceeds. Are you okay now? So you don't have that much of goodwill. Your sold security for 90 rupees. Yes or no, sir? How much you will receive back? 90 only. Can I use a word called discount? 90 is discount or 10 rupees is a discount? 10 rupees is a discount. How you calculated means, so net proceeds equal to face value minus discount 90. Ultimately, what I want, how much I receive to my pocket, either more than 100 rupees or less than 100 rupees. Are you okay now? Now the amount you sold is known as issue price. You can issue at what? Face value, premium, discount. Now take another example to understand. I sold for 110 rupees. Are you clear? No one is ready to purchase that security for 110 rupees. Now what we need to do? We sold for 110 rupees to the market. No one is ready to willing to buy the debenture for 110 rupees. Now we have an option name called underwriter. We have an option called what, sir? Underwriter. We appointed an underwriter. We transfer the entire risk to him. He will ask 5 rupees per debenture. I will sold to the public, you don't worry. But I want underwriting commission. How much? 5 rupees. How much one security I sold? As a owner, how much I sold in the market? 110 rupees. How much net I received? Why 105? Issue price 110 rupees minus underwriting commission. Net amount I received. That is called net proceed. That is called net proceeds. Ultimately, how much you receive to your pocket, you need to quote as an NP. Are you clear? In simple terminology, net proceeds equals to issue price minus what, sir? Flotation cost. What are the amount you are paying to underwriter is known as a flotation cost. Flotation cost. What's the mean for issue price, guys? You can issue at face value, you can issue at premium, you can issue at a discount. What's the mean for MP? Write down the full forms also. Don't use the shortcuts. Net proceeds. Sometimes instead of net proceeds, in questions, they will give a word called sale proceeds. Both are same. Now what is the MP, guys? Market price. Simple. If there is no information of net proceeds, or you can go with the, you are not an existing company. You are not a existing company. You are an existing company, you have both the values of net proceeds and market price. If you are in a new company, what value you have? Market price or NP? NP. That kind of differences we have. Are you okay? Done. Now, let us decode here. What point of view? Redeemable point of view, right? Now the calculation will be changed. KD equals to interest 1 minus tax plus repayment value minus net proceeds or market price. You want to take any one, not both. Either net proceeds or market price. Divided by N. Whole divided by repayment value plus net proceeds or market price divided by 2. If you want a percentage, you need to multiply with the 100 totally. Why? Because KD always expresses percentages answer. It's not a valuation class, it is an FM class. Guys, clear? Just recap. It will take 10 to 12 hours in a CMA in regular class. Just I will revising in 1 or 2 hours. Entire cost of capital for you. Sir, what you observed in the second formula? What you observed in second formula? Redemption of debenture. That's only na. Simple accounts is followed here, sir. Simple accounts is followed. There is a concept name called revenue expenditure and capital expenditure. Yes or no? No? When it comes to irredeemable debenture, are you paying any capital expenditure? That's why you just calculating what expenditure? Revenue expenditure. You can observe in the first formula, there are only revenue elements is there. Are you okay? Now what you observed in this formula? See, this is known as revenue expenditure. This is known as, why? Because 2 expenditure I am incurring in redeemable debentures. Hope you guys, you understand well. Yes or no, sir? Okay, sir. This is called revenue expenditure. This is called capital expenditure. I will agree. As per definition, what you said in a definition, you will receive interest for n number of years. At the end of the nth year, you will receive capital. That's why you consider revenue expenditure calculation as well as capital expenditure calculation. What about this average? What about this average? What about this average? Anyone? Simple, sir. If I have only either net proceeds or market price, I will consider one. But when coming to here, I have how many? Two. One is repayment value for a capital expenditure purpose as well as net proceeds for both the purpose. Instead of selecting individual, I consider what? Average. Guys, clear? Huh? Here net proceeds and market price are not two elements. They are single. You can take any one. But what is the new thing happening here? Repayment value or redemption value. Repayment value or what value? Redemption value. Write down the full form. RV equals to repayment value or redemption value. That is the decoding of the formula, guys. That is the decoding of the formula. So this, if you want a clarity, you can go like this. Interest 1 minus tax is known as what expenditure? Revenue expenditure. This repayment value minus net proceeds or market price divided by n is known as capital expenditure. You consider only single or two? Two. Why? Because it is a redeemable debenture definition. Same, sir. Net proceeds and the market price calculation. Okay. Now, here RV is there now. What's the full form for RV? Repayment or redemption value. Sir, can I repay more than the face value? Can I repay more than face value? What is the face value? Generally, they will express the face value. If they not express, assumption 100 always. Are you clear, sir? It's a basic assumption we are following from foundation level. If they express us, well and good. If not expresses, assumption. What is the face value? So repayment may be at a face value or premium or discount. Under discount, anything can happen. Issue also same, huh? Sir, issue also same, huh? What is the issue? Issue at face value or sometimes they're using a word called par. Be clear? Sometimes they will issue at premium, sometimes they will issue at discount. If you completed, that is the concept of cost of debenture. Any doubts? Any doubts on the cost of the debenture? So this is the deep insights of the cost of debenture, guys. If you talk about some more thing, some more stuff, we will that is not required also. This is sufficient. Now let's open our material. Illustration number 1. Illustration number 1. So unless they specified, keep in your mind this point, unless they specified, if they provided interest rate, it is a pre-tax. Unless they specified. If they specify it is a post-tax, then you can take it as a post-tax. If they not express any post-tax name, if they provided 10%, 12%, 13%, you need to assume it is a what? Pre-tax. You have to convert pre-tax into post-tax. Why? Because in calculation, you need to use only post-tax KD. Guys, clear? Huh? Now let us check this. If the rate at which the company can borrow funds from the financial institution is how much? 11%, and the tax rate applicable to the company is 30%. Any specification of the 14%? They expressed any name? Pre-tax, post-tax? Just forget about the from here to here. Just check before the 30%. Any clue regarding this 11%? Any specification? What is assumption? What is assumption? Pre-tax. What you required? Post-tax. How you convert it is a post-tax? Interest 1 minus tax. Sir, you need to check either it is a redeemable or irredeemable first. Redeemable or irredeemable. If there is a no n number of years, which kind of capital it is? If there is a no n number of years, which kind of capital it is? Irredeemable debenture capital. Guys, clear? These are the clues we have to find out the KD. Now, yes, it is a pre-tax. I want post-tax. How we convert into post-tax? KD equals to interest 1 minus tax divided by net proceeds or market price. Yes or no? Na? Now there is a no market price information. That's why I am eliminating this market price. Okay. As well, there is a no net proceeds information in the question. Can I eliminate this net proceeds? Yes or no? No. Listen. What is the interest rate they given? 11%. Huh? Can I take 11 rupees? Why? Always face value assumption how much? 100. Now interest equals to 11% on face value. What's the 11% of face value? 100 rupees. That is nothing but 11. Nana clear? Ra? This is a detailed calculation part. Now 1 minus tax is given. That is nothing but 0.3 divided by net proceeds. What is the definition of net proceeds? Amount you receiving back. Any notation cost in the question? No. Any issue price information like a premium discount? No. What is the thing happens? They sold at what? Face value 100 into 100 you will get a percentage. 100 get cancelled. That is the calculation part they done. They are not eliminated. Guys, clear? Huh? Now what is the answer? 11 into 0.7. How much? 7.7%. If you learn the detailing of the one problem, that is sufficient for remaining problems. Are you clear, sir? Are you understand the deep insights of this calculation? It's not a direct calculation, sir. Are you clear? Now, let us come to illustration number 5. Let's come to illustration number 5. Forgot about the all information. Just check the debenture related information. Just to check the debenture related information. In this entire box, I have one information that is called what, sir? 14% debenture, face value 1000. How much rupees it is? 9,70,000. Now, the dividend per share expected of the next year is 3.5, expected to grow at the rate of 12%. This is relating to equity share capital. I don't want this. Next, preference shares are redeemable after 5 years at a premium 5%. Up to here is talks about preference share capital. I don't want this. And yes, I want this. Debentures are redeemable after 10 years at a face value. Repayment at which value, sir? Face value. Okay. The applicable tax rate of the company is 40%. Yes, this is the debenture related information. Guys, clear? Forget about the remaining all. So I have an information 14% debenture, face value at the rate of 1000, 9,70,000. Can I use the word book value? Can I use the word book value? At the time of calculation of this problem, I will reveal the new, exact values. Up to now, take an example to understand the redeemable KD. Forgot about the entire information what they given. I'm creating the example based on the information. 14% debenture, face value 1000 rupees, amount of capital is 10 lakh. Are you okay? Now the additional condition they're saying that redeemable after 10 years, the tax rate 40%, 10 years at face value. Now this is the information available as an example, sir. It's not related to the above question, it's an example. Now you need to calculate KD for this. Now first you have to decide it is a redeemable or irredeemable first. How you decide? Based on the N, as well as they specified the name redeemable. Are you clear, sir? Now, yes, it is in a redeemable debenture. How you calculate a redeemable debenture? Interest 1 minus tax plus repayment value minus net proceeds divided by N whole divided by average. Yes or no, sir? Now, what is the I? What is the I? 14% interest rate, right? Only now. I want in rupees. How you calculate rupees? 14% on face value. What is the face value? 1000 into 14%. I already specified. If they provided the information, follow that. If they're not provided, then you take an assumption face value equals to 100 rupees. Guys, okay? Now, what is the interest value? 14% of the 1000. 140, yeah. Now, what about the tax? 0.4 plus repayment value. Plus repayment value. 1000. They specifically mentioned face value. For understanding purpose, I am changing discount after 10 years at discount of 10%. Now read the question. How they redeem? Face value or discount? Discount on what value? Face value. The common sense. Now what is the repayment value? Repayment value 900 minus net proceeds. Why? There is no information. You need to take an assumption. How you sold that shares? Face value. Debentures, face value. What's the face value? 1000 divided by N, 10 years. Now please calculate. Now please calculate. So what about the revenue expenditure? Revenue expenditure 140 into 0.6, 84. What about the capital expenditure? I think minus. How much? Minus 10 divided by average 950. Now please tell me the answer. 84 minus 10 divided by 950 into 100. 7.789%. This is a way to calculate redeemable what? KD. Any doubts? Now, but for understanding purpose, I am changing this example. Premium of 100% or 10%. Now same calculation changes. What change? Just repayment value will be changed. What is the repayment value? 1100. Now here also 1100. Now what about the calculation part? Revenue expenditure not change, capital expenditure changes. How much? Plus 10. Average 1000. 1050. Now 94 divided by 1050 into 100. 8.9%. 95%. This is a way to calculate KD. So few students are thinking that if it is a negative value, I think we done a wrong calculation. No, sir. If your net proceeds is net proceed value is bigger than the repayment value, you will get a negative only in capital expenditure. Common sense, na. I am taking from that person is 1000 rupees. I am repaying 900. Capital expenditure more or less? Less. That's why minus. Just understand the conceptual manner. It will give a more clarity than calculation part. Guys, okay? These all are examples. Now, I think you got a more clarity on cost of debenture. The only thing you need to understand, we are not using pre-tax KDs, we are using post-tax KDs only, either in irredeemable point of view or a redeemable point of view. Unless they specify, I am assuming it is a pre-tax. If they specify it is a post-tax, yes, I will take directly. Done. So next, there is an no that much of extra in KP similar to this one only. So what's the next concept? Cost of preference share capital. Now same, irredeemable, redeemable. When it comes to irredeemable, KP equals to preference dividend divided by net proceeds or market price. Preference dividend divided by net proceeds or market price. Preference dividend divided by net proceeds or market price. When it comes to the redeemable, anyone? KP equals to preference dividend plus redemption value minus net proceeds or market price divided by N whole divided by average. So what is the difference between KD and KP? Both are same. Two things are different. Interest, here preference dividend. The interest have a tax advantage, preference dividend don't have any tax advantage. Clear? That's the only thing you need to learn newly. Remaining all are same. Similar calculation of preference dividend. How you calculate interest rupees? Face value into percentage. Here also same. Preference dividend equals to face value into percentage. What's the mean for net proceeds? Amount netly received. Yes or no, sir? Issue price minus flotation cost. Now what is the RV? Repayment, either in a face value or a premium or a discount. No need to worry about the calculation. It's similar to KD. Okay, done. So our next concept, cost of equity share capital. Very, very important. Cost of equity share capital. Cost of equity share capital. The points we have to learn here. KE calculation. Difficult than KD and KP. KE calculation difficult than KD and KP. Are you agree? Are you agree about this statement? KE calculation is difficult than KD and KP. Why? Why? Why is it difficult? Sir, in KD KP point of view, I have a clarity with help of prefix. Either 10% or 9% or 12% or 13%. I have one clue. Out of that, tax advantage removes, I will get a revenue expenditure. If there is a capital expenditure, I know how to calculate capital expenditure. When it comes to the preference dividend, I have a prefix rate. I am not adjusting any tax. you don't have a tax advantage. That's why KD KP we can easily calculate. But when it comes to KE point of view, we don't have any prefix. Are you observed anywhere? 8% equity share capital, 5% equity share capital, 12% equity share capital. No. That's why we don't have any base to calculate. That's why KE is difficult than KD and KP. Even though it is difficult, we need to calculate now. That's why they provided 4 methods. One is earning based. The second one, dividend based. Another one, growth is not a method. Capital asset pricing model. Another one, realized yield. Same, you need to learn in SFM also. But you have a proof for CAPM in SFM. Yeah. So there is a proof and a theoretic explanation for CAPM. Why we are taking RF, why we are taking beta, why you are considering RM. They have a clarity in SFM. But here just understand the formula. That is sufficient. Earning based, dividend based, CAPM, realized yield. Do you understand why I used a word called difficult? Because of these names. Because of these names. I can't decide which one is appropriate. I can't decide which one is appropriate. That's why it's difficult. Are you okay? Sir, when it comes to exam point of view, which one is appropriate means what are the information they given that is appropriate. Are you okay? Now, again, earning based classified into 2 types. Without growth, with growth. You already said at the time of introduction, growth aspect only for whom? Owners, debenture holder, preference share holder, bank. For whom? Growth. As a company, growth aspect you will share to whom? Only owners. That's why on above KP calculation, KD calculation, I not used a word called growth. It's only who stuff, owner stuff. Clear, sir? Company growth is only depends upon whom? Owners. That's why their shareable value only. Are you okay? Now when it comes to without growth, the calculation you need to observe. E1 divided by P naught. The word E1 is nothing but EPS, earning per share. Now when it comes to growth, sir, KE equals to E1 divided by P naught plus G. Now see, E1 equals to expected or next year or estimated EPS. What's the full form for E1, sir? What's the full form for E1? Expected or next year or estimated EPS. The words are very, very important and alternate names also very, very important. It will reflect in your future chapters, future concepts. Very, very important here. E1 means. expected or next year or estimated EPS. Next, P naught equals to current market price. What's the full form for P naught, sir? Current market price. Now, anyone? What about the G? Growth rate. Growth rate. Sir, why I used E1? So there is a two topics is there, E0 and E1. Anyone? What is the mean for E0 and what is the mean for E1? Yeah, E0 means beginning EPS. Can I use the word current year EPS? Present. Beginning is nothing but present. What does it mean for E1? End of the year and after 365th day. Can I use the word second year beginning? First year ending or second year beginning? Let us check the names. Expected or what year? Next year. What does it mean for next year? Beginning of the next year. Are you okay? Now, and also use the word called estimated EPS. Sir, how it came, sir? Sir, E0, E1 equals to E0 means current year. For that current year, you need to add what? Growth. Into 1 plus growth, you will consider that 365 days growth. You will get what value? Next year value. You need to use what value? E1 only, not E0. Yes or no, sir? Sir, I agree for this, sir. But when it come to this model, there is a no growth, na? What is the first model? With growth or without growth? If there is a growth, E0 is not equal to E1. Yes or no, na? If you consider that year growth only, E1 is converted as E0 is converted as a E1. But what here? E1 equals to E0. Are you agree? Why? No growth, sir. Last year 10 rupees EPS. This year also 10 rupees. When it come to this with growth concept, E1 equal to E0 or E0 not equals to E1? E0 is not equals to E1. E0 is not equals to E1. Or instead of not, first E1 not equals to E0. Why? Anyone? Because of growth aspect, E0 is different, E1 is different. Just take a simple example. Sir, last year they paid 10 rupees, sir. This year 10% growth is there. How much you will receive? 10 rupees or more than 10 rupees? That is nothing but 10 rupees growth only, na? Adding 10% growth. Now tell me 10 equal to 10.1? 10 equal to 10.1? 1 rupee, growth? Yeah, 10 equal to 11? That's a E0. E1 is not equals to E0. Guys, clear? You need to use only what, sir? E1. Very, very important. This is the only thing you need to use in all concepts of future. Expected. If they provides a growth rate, what value you have to consider as a calculation part? With growth value or without growth value? If they provide a growth rate in the question, you need to consider only what value? Growth aspect value only. Current year is different, next year is different. You need to consider only next year values. How we get a next year? Current year value add up with growth, you will get a next year value. Guys, clear? Done. In Inter itself, we done a valuation. In this formula, we have a valuation principle. What is the valuation here? What's the formula for KE without growth? E1 divided by P0. Shuffle the formula, you will get a P0. How you get a P0? P0 equals to E1 divided by KE. That is called security valuation. Market value of a share. What's the full form for P0? Current market value per share. Yes or no, sir? Valuation. Now, how we get a market value as per with growth? As per with growth. P0, if you send this side, KE will came to here. E1 divided by KE, right? Now see, P naught equals to E1 divided by KE minus G. Sir, clear? See, that's a valuation we already done in interlevel. Now what is the valuation here? Write down. P naught equals to, in without growth down, P naught equals to, P naught equals to E1 divided by KE. Sir, in further classes, KE is there, na? We will change KE name. Meaning is same. We will change the name. Instead of KE, we are using R, small r. The full form for small r is required rate of return. What's the KE definition? Minimum expected only, na? Expected is nothing but required. Are you okay? When it come to with growth, what's the valuation? See, step by step I will do. First I will send this plus G into this side. What happened? KE minus G equals to E1 divided by P naught. I want valuation, means P naught. P naught equals to E1 divided by KE minus G. Guys, clear? So in further classes, instead of P naught, we are using what called V naught. Value per share. Value per share. Simple, man. If you know the value per share, I have 1 lakh rupees. Can I find out the market value of equity? Yes or no? You figure out that P naught or P naught here, multiply with the number of shares, you will get a market value of equity. Are you okay? Next, when it come to dividend based. So when it come to dividend based, same as EPS, nothing is new. See, with growth, without growth. When it come to with growth, so first without growth, second with growth. Without growth, KE equals to, instead of EPS, I am using what? DPS. That is nothing but D1 divided by P naught. With growth, anyone? KE equals to D1 divided by P naught plus growth. Now what's the full form for D1? Yeah, word you need to use expected. Expected or next year. These are the keywords they will use, sir. If keywords is not there, what it is? Current year. If you use a current year value, answer is wrong. You need to convert that current year value to expected or next year. Expected or next year or estimated. Estimated of what? DPS, dividend per share. Okay. Now, when it come to without growth, can I take D naught equals to D1? Without growth. D1 is same. D1, D naught also same because of no growth. When it come to with growth, can I use D1 equals to D naught? Yes or no? With growth, D1 equals to D naught. No. Now what is yes? D1 equals to D naught into 1 plus growth. That is the right one. If they directly provided the name called expected or next year or estimated, you can take directly, it is a what? D1. If they provides current year and growth rate, you need to convert that current year DPS into next year or estimated or expected. How? You know, D1 equals to D naught into 1 plus growth. Any doubt on this? Sure. Now, please do the valuation. Your calculated cost of capital, but I want valuation with help of this. Is it possible? Yes, sir. P naught is the valuation here. Now, what is the P naught as per without growth? D1 divided by, can I use the word R? Expected rate of return. Are you clear? Now, when it comes to with growth, expected DPS divided by R minus G. R minus G. Write it down. Don't use R here. In future, we will write. After the sixth chapter, we will start R. Up to chapter 6, go with the KE only, specification. Guys, completed, huh? Valuation completed. You can use instead of P naught, V naught also. So what's the next one, sir? Next concept, calculation of KE under CAPM. Simple. KE equals to RF plus beta into RM minus RF. You know the full forms of RF. Risk-free rate of return. Are you clear? RM, market rate of return. Beta, risk sensitivity. Beta represent risk sensitivity. Are you clear? Now, there is a one note point is there, risk premium. If they use a word called risk premium, it's a direct answer of what? RM minus RF. If you know these all things, completed. Now just write down the full forms, that is sufficient, as well as note point, risk premium equals to RM minus RF. Guys, completed. Now go with an exam standpoint of view. Can I find out P naught with the help of KE of CAPM? So are you recorded this full forms? RF, risk-free rate of return. Example, government securities. Compared to private company securities, it will give a less risk. Risk is there, but less risk. Are you clear, sir? Coupon bonds, government security, treasury bills. These are the example for RF. What is the RM? Market rate of return. Example, BSC, NSC. What is the beta? Risk sensitivity. Sometimes they are using a word called systematic risk. Are you clear, sir? Systematic risk calculation with help symbol of a beta only. So beta is nothing but risk sensitivity. Now what is the important note point here? Sometimes they will use RF value, RM value as well as risk premium. Don't confuse on that time. Take directly RM minus RF equal to risk premium answer. Risk premium. That is nothing but RM minus RF. Now, as a CMA examiner, create a question based on these concepts. Are you clear? Now, I have a doubt. With the help of CAPM KE calculation, can I figure out P naught or value of the share? Is it possible? If you know the full forms, we can easily say it is not possible to calculate P naught or V naught with help of CAPM. That's why examiner will plan. What he plan means they will club dividend information and CAPM information. In exam point of view, they will club information of dividend approach model, dividend based model of with growth as well as CAPM. How they plan means, what is our formula for dividend model with growth? I don't want KE, I want P naught valuation. P naught equals to D1 divided by KE minus G. They will give D1, they will give G, they will not give KE. For KE calculation, they will use CAPM. Guys, clear? This is exam tactics. Very clear? Student will confuse. Why? Because initially there is a CAPM information. In between there is a dividend model information. Again there is a CAPM information. They are asking about the V naught or P naught. How it possible he will confuse. Are you clear, sir? If just applies the common sense. Are you clear? If it is a formula based question, write down the formula first. Then procure the information what you required. It will works in SPMBV totally. Just to go and check the requirement. If it is a formula based, write down the formula roughly. Are you clear? On that formula, you have some names or words. Please procure that words related information from the question. Don't check entire question. Are you clear, sir? Now, for example, V naught or P naught valuation based on dividend growth model. They're asking about the V naught or P naught. Available information is dividend model based. So then you need to strike, okay, in a dividend model KE calculation, we reversely, if you shuffle the formula, we can do valuation. Now, what is the formula? V naught equals to D1 divided by KE minus G. Then go and procure the D1 information. If they're directly given, take D1. If they're not directly given, convert the D0 into D1. KE they directly given, go and procure. If not given, please calculate. Growth they given, no issues. If not given, please calculate. Simple. One of the important concept in our BV, economic value added. The formula for economic value added is EBIT into 1 minus tax minus weighted average cost of capital, that is nothing but KO, into capital employed. So if they ask economic value added, I will write that entire formula. Now first I want EBIT. I know how to calculate EBIT. If I know income statement preparation, I can easily figure out the EBIT. Yes or no, sir? After that, I want 1 minus tax. Tax rate, generally they will give in the question. 1 minus tax completed minus, in brackets, weighted average cost of capital. That is nothing but KO. That is the only learning here. These all are called specific cost of capital. The total specific cost of capital is known as WACC, weighted average cost of capital. Yes, I know how to calculate. If they directly given, I will consider. If not given, I will use a calculation. Capital employed. Capital employed. How much amount I invested in the business is known as capital employed. If I know the clarity about that formula, by inserting the values, I will get an answer of 7 marks. Guys, clear? Maximum of the valuation based on this kind of pattern only, sir. Directly, if you are confusing the question, if you are confusing about the question, go and check the requirement. Then write down the formula. Procure the information now. Okay. Now, see illustration number 2. See illustration number 2. Wait. Add another point here. Beta equals to anyone have another formula? Covariance of market and security divided by variance of security and variance of market. Beta equals to covariance of market in bracket market comma security so beta equals to covariance of market and security divided by variance of market and security. You can write like this also. Covariance of market and security divided by sigma m comma sigma s. Sigma m comma sigma s. Guys, clear? And another point you need to learn here, standard deviation equal to square root of variance. If you want a variance, square of standard deviation. This is the basic stuff you required. Sir, completed? Now, come to illustration number 2, sir. If the 10 years government bond yield is 7.5%, can I take it as a RF? RF or RM? RF. Next, the BSE Sensex return over the last 1 year is 15%. Can I take it as an RM? 15%. Okay. Assuming the company beta is 1.2, what is the required return on? Sir, we learned cost of equity, right? Why they are using a word called required rate of equity? What's the KE full form? Cost of equity, right? But instead of cost of equity, what the word they given? Required return of equity. Sir, both are same, sir. I said now R equals to what, sir? KE. What's the full form for R? Required return. Required return. Minimum expectation. In equity point of view, what is the minimum expectation? K is the minimum expectation. K is the required return. K is the minimum cost. Guys, clear? Now, so what's the formula? RF plus beta into RM minus RF. Now, please tell me the answers. 0.075 plus beta 1.2, RM 0.15 minus 0.075. Answer 0.165. Please calculate and tell me. 0.15 minus 0.075 into 1.2 plus 0.075. It's called rate, sir. 0.165 is known as rate. If you multiply with 100, you will get a percentage. Answer 16.5%. Don't confuse about that 0.165 and 16.5. 0.165 expresses rate. 16.5 expresses percentage. Now, illustration number 3. Just MCQ, sir. Very MCQ. Basic one. The standard deviation of return on the market index is estimated as 25%. The word index means both market and security. Now, if the covariance of company A's return with the return on the market index is 0.05, what is the beta of the company A? What's the formula for beta? Covariance of market and security divided by variance of market, variance of security. Now covariance of market security given in the question directly 0.05 divided by variance of market, variance of security is not given, but standard deviation of market and security is given. So what is the standard deviation is given? 25%. Now what is the logic I said for variance? Variance equals to standard deviation square, that is nothing but 25 square. So in a numerator I consider rate. That's why in denominator also I need to consider rate itself. Now that's why instead of 25 I using 0.25 square. Now 0.25 square equals to 0.0625. Now 0.05 divided by 0.625 or 0.625? 0.625. Now what is the answer? 0.8. Hope you understand this. If your numerator is rate, denominator also need to be a rate. If you take a numerator 5%, you can directly take a 25%. Guys, clear, sir? The basic things. So for example, go with the total values. 0.05. Can I use the word 5%? 0.05. 50% or 5%? Percentage form. Rate is 0.05. I want percentage. If you multiply with the 100, you will get a percentage. 0.05 into 100, 5%. 5 divided by, what is the 25 square? 25 square, 625. What is the answer? 0. No, sir, no, sir. So no, can't express in percentage. You need to consider only rate. Yeah. Covariance always express the rate values, not percentage values. They provided 0.05 only, na index value. Index values are not in percentages, sir. Index value always expresses rate. Okay, done. Now see, illustration number 4. Speed up. It related into what, sir? KO, na? KO. We are not discussed about the KO, right? Okay. We will continue tomorrow class. Okay. These all are the basic stuff. Okay. But without this KE, KD, KO, KP, we can't solve any problems in valuation. That's why I'm explaining in detail. Okay. If it is not that much of requirement, I will express only formulas. I can't use why it is, what's the full forms. Are you clear? If you learn in detailingly, if you focus it conceptually, then you can crack any questions in our valuation. Guys, clear? So just to focus on the formulas, just understand the why it came, why we are using. Okay? Okay, guys, thank you. Then okay, guys, I'm concluding today's session. You have any doubts, ask me in group 4 chat group in Telegram. Akshay,